We are looking at the foreign exchange markets right now. Euro dollar at 137.42. Dollar yen essentially flat. Sterling yen flat. Australian dollar also flat. Not too much movement, but a lot of stories to digest in the foreign exchange market. We continue to watch the developments regarding Greece. We have a meeting of finance ministers taking place in Brussels. Will they say anything that will move euro dollar? It seems that the month of March so far has been quite positive for euro dollar. 137.42, as I said, and we have seen a bit of a turnaround, a little bit of stability put under the single currency over the last couple of weeks or so. The expectation is possibly we'll see some kind of bailout fund or some kind of fund at least being put aside for Greece. Dollar yen then 90.59, just moving as I'm speaking there. Of course, a lot of focus over in the Asian region on China and what Premier Yuan Revaluation is saying in response to American pressure to revalue the Chinese currency. Let's get an update now on Forex markets. Mario Singh joins us from FX1 Academy. Mario, thank you very much for coming to talk to us today. What's your take on what we've heard from the Chinese? Do you think that this war of words between the Chinese and the Americans will amount to anything substantial?
Well, it really seems to be picking up steam right now. In fact, today in the National Straits Times in Singapore, it says that the Chinese premier is rejecting firm calls to want to appreciate the yuan. So this is really going to be playing out at least in the next 1 to 2 months. But having said that, I do feel personally that the Chinese, they have to start appreciating the yuan. It's just only a matter of question of when. Just one quick point to note that in the CPI, or rather the levels of inflation in China, Chinese Premier Wen Jiabao, he's saying that he wants to cap inflation at 3%, at least for this year. And already the levels for February, it's at a 16-month high of 2.7%. So it's only a matter of time as when. My take is probably going to happen in the middle of the second quarter, probably about May. They will start rising the appreciation of the yuan.
Explain that to us, Mario. So around May, because of the inflationary pressure, it becomes in the self-interest of China to actually revalue its currency, and that's what we're going to see driving this decision rather than international pressure.
Absolutely. At this point, their major concern really is to strike up economic output, domestic demand. So they really are taking exports a lot more for a concerted effort, a lot more stronger. So until and unless they start to see a real big rise in domestic demand, they are still going to keep the yuan low so that it helps to drive up the exports.
Hey, Mario, let me ask you something about a Moody's warning that came out just this morning, essentially saying that with the fiscal deficit projections over the next 10 years in the United States, the U.S.'s AAA rating comes under pressure. How are you reading that statement? Because we have seen the markets reacting rather negatively to that.
Oh, that was a big thing by Moody's today. In fact, they say that not just the U.S. and the UK stand a chance to actually lose their AAA rating. Well, this is really hitting the markets a little bit hard. That's why we're seeing a little bit muted gains, or rather totally flat gains in all the risk currencies, really. It's not big news to the traders because traders do understand that these are big news. They know that to be happening. But ultimately, it's still about risk, it's about sentiment, and it's not helping the dollar with such big news coming out of Moody's today.
And when you pile that on top of the sovereign debt concerns that in Europe for now are muted, but it feels almost like we're waiting for the next shoe to drop, the next economy to face these concerns. Does that tell you that the dollar, which way does that give the dollar movement? Upside or downside? You've got these two different pressures then.
At this current point, dollar is really still in a sweet spot in the sense that when all good economic data is coming up the U.S., that helps to strengthen the dollar. When we're seeing risk aversion or problems in Europe, we see the dollar still heading upwards. At this point, really, it's still a tussle between how sovereign debt is going to weigh on the economies to see how, not forgetting that the U.S., at this current moment, 70% of the economic output or the GDP of U.S. is dependent on consumer spending. So the government is stepping in at this point to really help to stimulate the economy. It's just a question of when they're pulling out. Traders are really all still watching. In fact, for the next 2 days, we are seeing how the meetings in Greece and the finance ministers will play out before traders will actually take certain moves.
Yeah, Mario, what are the foreign exchange markets factoring in on the Greece story? Are they expecting that we'll hear about a 25 billion euro bailout fund?
I can't really say. At this point, if you're talking about the biggest economy in Europe, Germany is really having a I can't say that they are having big, strong optimism about having that bailout fund, but they're starting to have something like an EU monetary fund to help the bailout of all these countries. We're still going to see how that plays out, which is why you see flat gains in all the risk FX currencies like euro, the pound, the Aussie, all dropping us a little bit. we're going to see, it's going to be interesting how it's going to play out in the next 2 days to see how Greece would start to play out their plans and their austerity measures to the whole EU players.
Mario, thank you so much for joining us today. Mario Singh, co-founder and the CEO of FX1 Academy.